This episode is brought to you by Progressive Insurance. Fiscally responsible, financial geniuses, monetary magicians. These are the things people say about drivers who switch their car insurance to Progressive and save hundreds. Visit Progressive.com to see if you could save. Progressive Casualty Insurance Company and Affiliates. Potential savings will vary. Not available in all states or situations.
Good afternoon. We're doing it live, doing more at 4 weekday afternoons for you. We get right down to business here with the news-driven hour right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air on 790 KBC, streaming live online worldwide at KBC.com. And the on-demand Mottek On Money podcast, KBC.com, Apple, iTunes, Spotify, all your favorite podcast platforms. A well-fed sell-off today on Wall Street. Stocks and cryptos taking a tumble after the Fed cut short-term interest rates by a quarter percentage point, as expected, sending the prime lending rate to 7.5%. The rate banks charge their best corporate customers, also impacting consumer and business loans. Looks like the market spooked by what Fed Chair Jerome Powell had to say after the announcement. Stocks finishing lower today, with the Dow posting its worst day in more than 4 months. After the Fed decided to lower the benchmark interest rate by a quarter percentage point, but reduced its forecast for more rate cuts, that is, in 2025. The Dow came in for a closing loss of 1,123 points, a loss of 2.6%, settling at 42,327. The blue chip index now down for the 10th session in a row, and that's the longest losing streak since October of 1974. 10 losers in a row for the Dow Jones Industrial Average has not been seen since 74. The S&P 500 moving lower by nearly 200 points today, finishing at 5,872. That index was down nearly 3%. And the NASDAQ was down to 716 points at a drop of 3.6%, settling at 19,392. That was the biggest one-day percentage drop for the tech-heavy NASDAQ since July. Already this week, the Dow had racked up its longest losing streak seen in decades in anticipation of today's news on the Fed decision to lower rates. Crypto is also taking a hit, with Bitcoin down nearly $4,000 to just shy of 100,500. Stocks were crashing lower today after the Fed cut rates, spooked equities by signaling that only a few more rate cuts could be in the cards next year. Treasury bond yields also spiking, with the yield on the 10-year note at 4.52%. That's the one that impacts the fixed-rate mortgage rates. I'll discuss that part of today's news with Jeff Lazerson, the president of MortgageGrader.com, an Orange County Register real estate columnist. He'll be joining us live later this hour. The price of oil ending higher today, but well below the session's highs after the Fed projected fewer interest rate cuts next year. A federal appeals court recently struck down the NASDAQ's diversity disclosure rules for companies listed on the NASDAQ stock exchange. The rules were designed to boost the representation of women and minority directors on boards. I'll discuss that later this hour with professor, author, and human resource management consultant Dante King, who'll be joining us live. But first, on your money, the markets, the economy, the Fed, today's rate cut, the market's reaction, and the whole works. Joining us live now, stepping up to the plate, Jonathan HOENIG, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan HOENIG, thanks for taking the call. And what just happened here?
Frank, great to be with you. It was ugly out there, and everything was hit today, Frank. This is one of those days where they say that when the paddy wagon comes, they take the good girls with the bad. And, we saw big cap, small cap, mid cap cryptos, even oil, gold, and palladium all get hit.
Yep. Good point. Gold down more than $50 today at $2,600. Silver also cracking below $30 an ounce today. We did see Bitcoin slide in the several $1,000s to right now just above $100,000 per Bitcoin. Of course, Bitcoin hit record highs, as did the overall market. Given the magnificent run-up we've seen here, is it a big surprise that we've seen this kind of a pullback?
Well, a couple of things on my radar screen, Frank, one of which is the narrowness of the market. The market's breadth. We talked about this just last week. More stocks hitting new 52-week lows than new 52-week highs. That's been getting worse and worse for weeks now. So it's really only been a small minority of stocks that have been holding the whole index up. We've also seen tremendous bullishness in terms of people anticipating higher stock prices. We've also seen record low levels of cash in terms of portfolio investors and portfolio holding in their portfolios. So add it all up, Frank, it almost seems as if the Fed news was icing on the cake, if you will. And most interesting to me, again, we talked about this last week, is this is the third time the Fed has cut rates since September, yet interest rates are up sharply since September. So, we talked about the Fed being, early, being late. I think, Frank, this time they're absolutely late, as I said, rates have been going up just as the Fed's been cutting.
Excellent point there. When you say interest rates are up, the benchmark bond yields are up. The yield of the 10-year note suddenly shooting higher today at 4.52%. This on the same day the Federal Reserve cut its benchmark short-term interest rate by a quarter percentage point. So that's very interesting, and still wrestling with inflation. A lot of talk today that perhaps we'll never see the Fed's target of 2%, not anytime soon. So now the Fed's signaling fewer cuts than expected for next year. How does this translate on Wall Street, and whether this rally has run out of steam or what?
Well, higher rates, Frank, really do, they suck the enthusiasm out of any market. And I think especially, for example, gold and silver, those were really on some strong bull runs for many, many months. Even value stocks, they've been down now, I believe, a record 10 or 12 sessions for value stocks. So, higher rates are really going to be a drag on risk assets overall. And, I do think on some level, Frank, we're due for a correction. 5%, 10%, 15%, as I said, record levels of enthusiasm about the market and record amount of money coming into the market. Frank, in the last 9 weeks, you saw the most money in history coming into stocks. So, that's the average investor, if you will. They're often wrong. And I think why now, ironically, it's not a good time to buy the dip.
All right, certainly among the crypto crowd, it's a lot more fun when it goes up. A tough day for Bitcoin. Had, of course, hit a record high just in the last week or so. What was it, about $108,000? $100,000. So now it's just above 100,000 here. What about Bitcoin, which has been getting your attention lately?
Yeah, I mean, Frank, it's been a miraculous run. I mean, up, what is it, some 100-some percent just since the election, and it's spread. I mean, it's not just Bitcoin. Frank, we talked about this last time. There's an entire cryptocurrency called, no joke, Fartcoin, that has, a $600-700 million market cap. I think today, unfortunately, burst the bubble of many who thought that, crypto could be some kind of a hedge against stock market decline. In fact, Frank, its decline today almost tick for tick tracked the NASDAQ. So as I said, today was one of those days that, the paddy wagon came. They took everyone down. So all eyes are going to be, and look, if Bitcoin can't withstand a massive decline in markets and stocks, I think the argument for holding it is going to get a little bit thin, especially still over $100,000 a coin.
All right, help us understand what happened here in all this. The dollar firmed overseas, and normally that's not good news for the Dow, certainly, because it makes our stuff more expensive overseas. The dollar now is firmed to 103 versus the euro. We're at 154 versus the yen, and at 125 versus the British pound sterling. Gold taking a hit, apparently, on the stronger dollar here, down to 52 to 2,600 and change. Silver at 29 and change here at the moment. Bond yields rising. So maybe you can help explain the market dynamics here and how that might influence investment decisions here.
Sure. Well, there's a couple ways to play some of those trends, Frank. You mentioned the higher interest rates. There's actually a fund. The ticker is RISR. That's RISR. It actually does well. It benefits from higher interest rates. The other is the dollar that you mentioned. UUP is a pretty unusual ETF. It actually goes up with the value of the dollar. And Frank, oftentimes markets, you really don't know exactly why these trends are in place. But I do think one begets the other. That is, higher interest rates begets a higher dollar price, and also lower prices for for international equities and a lot of those commodities as well. So, we've talked about holding gold and silver. I still think you can hold those assets, but for putting new money to work right now in commodities, I actually think you're better off buying DBA. That's David Boy A as an agriculture. That's an ETF that tracks corn and soybean prices. But today, as I said, Frank, just an ugly day where almost nothing worked. And if rates keep going up, you're going to see more days like today.
All right, and of course, when we see something like this, given the bullish enthusiasm we've seen up until today, really in the last month or so, the temptation is to buy the dip. What are your thoughts about that?
Well, I'm not a big believer at all in buying the dip, Frank, because you never know if a dip is just a dip or the beginning of a longer-term decline or even a bear market. Even in, let's say, 2008, people thought they were getting a great deal. Same thing within 2000. So what I'd want to see is some stocks start to at least put in a basis. At this point, there's still a lot of falling knives. If you were looking to put money to work, Frank, I'd say go with what's working. Teva Pharmaceuticals, that's TEVA. It's actually an Israeli company powered through to new highs today. I actually also like Liberty Formula One. Ticker symbol on that one is FWONK. You always want to do your own due diligence, but I think this is going to be a real stock picker's market. You're not just going to be able to buy the indices and make money. I think in 2025, it's going to be much more selective and much more appropriate, I think, to hold cash, Frank. As I said, higher interest rates, you're getting paid even more simply to hold cash. And I think we're going to be in for a hell of a ride in 2025.
Interesting talking about higher interest rates on a day when the Fed cut interest rates. I really can't remember a time quite like this. And is the Fed trying to juice the market here, or what page is the Fed on at this point?
Frank, I just think that they're human, just like the rest of us, and they're often wrong. They want to move slowly, and they want to move, try to telegraph to the market what they're doing. But it reminds me very much of that period of time in the in the 1970s we've talked about. From 1974 to 1976, interest rates actually came down pretty dramatically, not unlike they have in the last year and a half. But then from 1976 on, they went up dramatically, eventually eclipsing 10%. And I think unless we can actually get some sincere spending cuts and sincere shrinking of government under President Trump, you'll likely see inflation tick up once again and interest rates as well.
And certainly the market focused on the transition. We saw that big Trump rally, and now this pullback here. And curiously, the Dow down 10 days in a row. Haven't seen anything like this since the 1970s. What is the significance, you think, of these many days consecutively down for the Dow Jones Industrial Average?
Well, through all of them, Frank, that breadth that we've talked about for quite a number of weeks now has been negative the whole time. So it's almost as if, underneath the table, the legs of the market have been getting weaker and weaker. And even some small caps, for example, which had been doing quite well, but after the Trump win and even before a period of time before the Trump win, really had the air sucked out of them in the last couple of days. So, there's that old saying, when in doubt, stay out. I think that's an appropriate time right now. As I said, we simply don't know whether this is just a dip or the beginning of a bigger decline. So if you're a real long-term investor, be that long-term investor. But I think if you're just thinking about putting money to work, wait and see whether this dip becomes a more substantial decline.
All right. What about oil? Middle East, of course, still very much in focus. Oil has been holding pretty steady right now at around $70 a barrel here. What about oil?
Well, some of the weakest stocks, Frank, actually have been the oil companies. I mean, Warren Buffett's favorite, Occidental Petroleum. I know it's not a major oil company, but it's reached, I believe, a 2+ year low. ConocoPhillips, a lot of the oil and drilling companies in particular have done pretty poorly, Frank. And not only that, but shipping as well. So to me, that's telegraphing some signs of a slowing economy. So oil it wouldn't be on my list right now. I think in the Middle East, you want to bet on what's working. And what's working, Frank, is Israel. Being attacked through 3-4 fronts over the last year and a half. The country is powering through it, and EIS, that is an ETF that tracks Israeli stocks, is one that I do own at capitalistpig.com, and I think that will be a spearhead of wealth creation and investment for quite some time.
Very interesting. We're on the air live with Jonathan Hoenig, and Teva is the Israeli pharmaceutical company which specializes in generic drugs that you mentioned earlier. So we did take note of that. And it should be noted also the Dow has been sliding ever since NVIDIA was placed on the Dow Jones Industrial Average. The Magnificent One, which of course is the AI darling, had that tremendous run-up, led the market charge among the Magnificent Seven, was added to the Dow Jones Industrial Average just in recent weeks, pulling back today, down $1.48 at 128 and change. It, too, has entered correction territory. What about NVIDIA and its impact on the Dow at this point?
Yeah, I mean, down 8% in just the last month, Frank, in terms of NVIDIA, but still up, over 165% year to date. I mean, look, we've said this for a number of times with you on your fine program. I do believe the AI is the future, but when you're buying a stock, you're buying a valuation of a company. And the AI plays are tremendously overvalued. So if history is any guide, we could see something very much like what happened in the early 2000s. The internet stocks failed even as the internet itself took off. Cisco is one that comes to mind, Intel as well. Intel and Cisco trade lower than they did in 1999 and 2000. So big fan of AI, but I think NVIDIA, the story is out, and this is some weakness I think you should avoid.
All right, Tesla, we had a record run as well, pulling back 8% today, down nearly $40, back to 440 and change. What about Tesla here?
Well, it's I think more difficult to analyze now, Frank, more than anything, because it's not a stretch to say that so much of that boom has come from Elon Musk's very close relationship with President-elect Trump, certainly influencing him in terms of regulation, in terms of steering business and perhaps government contracts. In fact, you saw Jeff Bezos and Amazon donate, I believe, $1 million to President Trump's reelection efforts, so the inauguration committee, if you will. You have to imagine some of that as he's seeing Tesla stock shoot up 50% since the election. But I think based on this idea, Frank, of not buying dips, you'd rather buy it higher. And, the fact that Tesla has rocketed so far, so fast in just the last 3 or 4 months, I think means this is one that is likely to cool off before it heats up again.
Elon Musk had that stratospheric jump in wealth since the election, too, by the way, moving above $400 billion, got up to, $460-some-odd billion today, back down to $441.6 billion. He lost $22.4 billion right out of his pocket. Jonathan Hoenig, how would you advise somebody like that just gave up $22.4 billion today?
What's so remarkable, Frank, is not only is he wealthy, in fact, by many measures, the wealthiest person in history, but his wealth compared to other tech CEOs is massive. He's worth roughly double, for example, himself, what Jeff Bezos is worth. And all of it is not just Tesla. Of course, he's innovating with SpaceX and the Boring Company. And, no matter what you think of him, Frank, you have to appreciate Elon Musk as a real American success story. I mean, came here as an immigrant, made it, changed the world. Something really to be proud of. Again, whether you don't like the guy in particular, this is a great American success story we should all celebrate.
Absolutely, and we'll see you on X, by the way, Jonathan Hoenig. You do a great job on social media. We'll be looking for you there today as well. Jonathan Hoenig, Fox News contributor, Fox Business contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. A great gift idea this holiday season, available on Amazon. Jonathan Hoenig, Christmas is coming up, so we wish you a happy holiday season, and thank you very much for taking the call here this afternoon.
Thank you, Frank. Thank you, KABC. Have a successful, healthy new year.
Likewise, Jonathan. Look forward to speaking with you again very soon. And let's get right out to the freeways now here on 790 KABC.
Baby, are you down?
Mottek On Money continues here on 790 KABC. Yep, a down day today, a well-fed sell-off on Wall Street with the Dow tumbling 1,123 points at the closing bell. Yep, you heard me, down 1,123 at 42,327. The S&P 500 down nearly 200 at 5,872. And the NASDAQ sliding 716 points at 19,393. The yield in the 10-year note is shot higher today to 4.52%. All of this after the Federal Reserve decided to cut short-term interest rates by a quarter percentage point, and that was widely telegraphed, widely expected. They're setting the prime lending rate to 7.5%. That's the rate banks charge their best customers. The Dow now has slid 10 sessions in a row. Haven't seen anything like this as far as the length of a losing streak since October of 1974. The NASDAQ has seen its biggest one-day percentage drop since July, a drop of 3.6% today. The S&P 500 was down nearly 3%. The Dow racked up a loss today of 2.6%. The price of gold also getting hit today, down $52 at the moment at $2,600 and change. Silver just below $30 an ounce. Taking a look at Bitcoin, also getting hit today, right now down about $500, just above $100,000. Ethereum pulling back, down 78 now at 3,619, and Doge has slipped to 36 cents. Tesla among the biggest losers of the day, down 8% after its recent run-up, down nearly $40 at 440 and change. Impacting the net worth of Elon Musk, who heads up Tesla, as well as other enterprises, as you well know. His net worth plunged $22.4 billion today, back to $441.6 billion. The dollar firming overseas in all this, now 103 versus the euro, 154 versus the yen, and 125 versus the British pound sterling. Among the tech darlings, Apple down more than 5 at 248 and change, and NVIDIA, the magnificent one, now part of the Dow Jones Industrial Average, down $1.48 at 128.91. And now the latest news here on 790 KABC. Mottek On Money continues here on 790 KABC. The party's over on Wall Street, for the moment anyway, with the Dow down more than 1,100 points at the closing bell today at 42,327. The S&P 500 sliding nearly 200, back to 5,872. The NASDAQ tumbling 716 points at 19,393. All this despite the Fed cutting short-term interest rates today by a quarter percentage point, which the markets expected. But the Fed signaled that only a few more rate cuts could be in the cards in 2025. In all this, while the Fed cut short-term rates, benchmark Treasury yields spiked, with the yield in the 10-year note moving to 4.52%. That's the one that impacts the fixed-rate mortgage rates, impacting real estate. And joining us live now, right out of Central Casting, Jeff LAZERSON, the president of MortgageGrader.com and Orange County Register real estate columnist. Jeff, thank you very much for taking the call here.
Thanks, Frank. Ho, ho, ho. That's not a very good Christmas present for what happened today. Oh, my gosh.
Yes, the Grinch took over here today. Yeah, give us an update, first of all, on how rates look following what happened today.
Well, so the 30-year fix is at 6.5% at one point, and that's up to 806,500. The 15-year fix is at 5 5/8%. The high balance, that's 806,501, all the way up to 1,209,750. The high balance jumbo is 6 7/8 at one point for the 30-year, and the 15 years at 6 1/4. Jumbo rates are about 6 5/8%, so anything over 1,209,750. So rates, they faded a little bit today. Wasn't a good day for the bond market, I'll tell you that.
Where do you see the rates go from here?
I'm actually optimistic, Frank. I'm doing my predictions this week for the newspaper column, and I'm actually calling for rates to be under 6% next year. And call me a contrarian. I don't know, but nothing ever seems to go as people expect it, and everybody keeps. I'm hearing a lot that people think rates will be in the 6 and 7s next year, and there's some reasons that it could go lower, like high consumer debt. We owe, I think, something like $18 trillion in consumer debt, including home loans, of course, but that's an all-time high. And with grocery prices and utility prices and homeowners insurance, all that stuff being very high, I think there's a lot of strain on the consumer. So my bet is rates are going to be down next year.
All right. You also track home prices here in the Los Angeles area and in Orange County. So we're still at or near record highs, right? What's the outlook? I don't want to give you away your entire column here. I want people to read it certainly this weekend. What do you see ahead for home prices?
Well, I think home prices are going to soar next year, and I'll tell you why. Because I believe that the capital gains tax exemption is going to go through next year. You have a Republican president, you have the House and the Senate, all three, branches are Republican, and they want to get things done. So I think that from the capital gains exemption will go from 500,000 to $1 million for a married couple, and from 250 to 500 for a single. And it's called the More Homes on the Market Act, and that was presented to Congress about a year ago, and it's been in committee for a long time. But I think it's going to come out. So if capital gains doubles and interest rates go down, I think the property values are going to go up a good 10-15% next year. Now, those are a couple of big ifs, but I don't see why they might not happen either.
All right. And on the financing side, a lot of talk this week again about the mortgage giants, Fannie and Freddie, the government-sponsored enterprises that were taken over by the government back during the financial crisis. And now the stocks that are publicly traded have been rising lately on speculation about possible privatization of those two giants. What do you think is going to happen?
I think they are going to be privatized. I don't think it's going to happen next year. I think it'll probably happen in 2026 or 2027. There's so much involved in privatizing them, but the big worry for me and for anybody out there for that matter should be if they go private. You don't have that implicit or explicit government guarantee on the money, and one of the reasons why the mortgages are so cheap compared to private banks and stuff is because you have that government guarantee that will make good on this debt, and that's why people from all over the world put money into the U.S. bond market and into Fannie and Freddie stocks and bonds. So it'll be a big problem though if they go private, because I would expect rates to go up. I don't know, 1% or 2% if they do privatize, and I think it's going to happen. But I don't see any way for rates to stay low unless there's something in there that the U.S. government's going to be willing to insure it still. But I just don't see that happening if they're out of conservatorship.
On there live with Jeff Lazerson, the president of MortgageGrader.com, also Orange County Register real estate columnist, longtime contributor on this program, which we always appreciate, Jeff. And certainly President Trump has a lot of experience in real estate, specifically commercial real estate. What do you see ahead on the commercial real estate front for the new year?
Well, I guess it depends on what kind of commercial you're talking about. If it's office building, I still think that's a danger zone because the rents have collapsed because of the people working at home. And even if some people are going back to work in the offices, not a lot of people are. So I think the offices are teetering still, but I think other types of commercial projects are probably in really good shape. Retail and manufacturing. There's, that I think that stuff is actually real healthy, and with the economy being as good as it is and continuing to be good, I would expect that those prices are going to hold just fine.
All right, and how's the mortgage business? You're always very, very candid. No matter what happens, good, bad, and ugly, you lay it out on the line. I remember the days when you were describing yourself as like the Maytag repairman, and then things got busier. How's business nowadays?
Well, actually, Frank, the last month or two, I've gotten a lot busier. I mean, it's not on fire or anything like that, but there's just all kinds of stuff coming in. People that want to pull money out of their property, they need a second mortgage. There's purchases. It's coming from all over, but I'm actually very optimistic about next year, at least locally, because I could see the activity, and I know from 38 years of doing this, when I'm busy in December, which is normally a super slow month, my next year is always good. So I'm very optimistic about it for me and for the people in the industry. I really think it's going to be a surprisingly good year.
Certainly it has been for the capital markets, aside from today. Curiously, on the day that we're talking, the Dow was down more than 1,100 points. But besides that, it was a record-shattering year for the stock market as well as Bitcoin and cryptos. Are people coming to you with with Bitcoin money these days, or earnings coming out of the market here?
Not really. I mean, you'd be surprised that it's still regular stocks and bonds, and not, the people with the crypto. I don't know where they're going, but they're not coming here. When we had a lender a couple years ago, I think I was one of the first guys in the country that did a crypto loan when it was, really new. It was, I don't know, maybe 4 or 5 years ago. I did one for a guy, and since then I don't know what happened, but they're out there, and I know a lot of them are making a lot of money, but they're not cashing it in or something, because the people that are taking their stock and their retirement funds for mortgages, it's just standard stocks and bonds that they're cashing out.
Who's buying? Americans? Remember in the olden days, Chinese buyers were swamping the market here, and are you getting a lot of foreign interest still, or who's buying these days?
Yeah. Well, there's a lot of foreign interest still. And remember, when the jittery stuff, the geopolitical stuff around the country, or around the world, I should say, it still scares people, and they run to the flight to quality in the U.S., and U.S. real estate is a boom. But the foreign buyers, they're almost all coming in with cash. 30% of the sales at least in Orange County this year have been for cash. And I mean, that's 30%. That's almost 1/3 of all sales. People are paying cash, and a lot of them are the foreign investors. So I don't see that changing one bit.
All right, Jeff, we'll look for your column this weekend. You did not spill all the beans, so we have something to look forward to here, but it's great to speak with you. It had been a while since we chatted behind the live microphones, and always great to speak with you out live on the air. Jeff Lazerson, president of MortgageGrader.com, and also Orange County Register real estate columnist. Jeff, we wish you a wonderful holiday season and happy, healthy New Year. Thanks for taking the call today.
Thanks a lot, Frank. Ho, ho, ho.
Yep, there you go. Out to the freeways we go. 790 KBC. Mottek On Money continues here in 790 KBC. Interesting legal case involving a federal appeals court in New Orleans recently striking down the NASDAQ's diversity disclosure rules for companies listed on the NASDAQ Stock Exchange. The rules were designed to boost the representation of women and minority directors on boards. The SEC had approved the rules, but they were later challenged. Conservative groups, the National Center for Public Policy Research and Alliance for Fair Board Recruitment, challenged the earlier court ruling in favor of the move. Let's bring in an expert on all this, professor, author, and human resource management consultant, Dante King. Mr. King, thank you very much for taking the call. And take it from the top, explain the significance of this and what just happened here.
Thank you very much for having me. So I think the challenges that we see right now in this moment as they pertain to challenging initiatives or disclosures or programs that center diversity, equity, and inclusion are a direct result of the fact that when this country was founded, it was founded, by white men for white men. And it was not intended for non-white men to participate in mainstream society in any position of substantial influence. And so we can see the underpinnings of that highlighted and outlined in two historical documents, one being the Declaration of Independence and the Constitution of the United States, or where it states that all men are created equal, but then the Naturalization Act of 1790 specifically states that citizenship is based upon whiteness. And so we have to understand that this country, being founded upon the tenets of white male patriarchy and supremacy, that it was never intended for non-white men and non-white people to have any substantial access or opportunity or influence in this environment. And I think that the backlash that we are seeing right now in this moment is a direct result of people who believe and feel that Black people, that non-white people, that women have been granted too much access to opportunity.
So the Securities and Exchange Commission, as I understand it, approved the rule that required companies at the NASDAQ to ensure women and minority directors were on their boards or provide an explanation of why this is not the case. We've seen a similar situation here in California. Maybe you can explain for us what this court ruling does to this case as well as other similar situations across the country.
Well, I think it makes it clear that we will not reckon with the reality that there's still rampant discrimination that persists in this environment, that all parts are not equal, that all things are not fair, and that it is harder many times for women across race, the racial spectrum, and also people of color, men, non-white men, to advance to into certain positions, and also accessing certain opportunities. And I think without that recognition and the affirmation of true intentional efforts, such as the step that NASDAQ took initially, that we will not see or experience the parity and the fairness that we discuss in terms of granting access to opportunities and treating people equally across the board. Like, that will not be actualized or realized in this environment with the state of how the courts are ruling, and then also organizations such as America's First Legal, which has been very consistently targeting both companies as well as programs that try to achieve equitable outcomes in terms of representation and participation.
Well, thank you very much for taking the call on all of this today and enlightening us on this important ruling. That is Dante King, professor, author, and human resource management consultant. He's also has a website. You can look him up, Dante King. Quite an interesting background you have, sir. Assistant professor at the Mayo Clinic College of Medicine and Science, also serving as guest faculty at UC San Francisco School of Medicine. And thank you very much for joining us live here this afternoon.
Thank you. Take care.
You too. And we have a bad day on Wall Street to talk about here to wrap things up. The Dow down 1,123 points. Yep, you heard me. Down more than 1,100 at 42,327. The S&P 500 down 178 at the bell. And the NASDAQ slid 716 points. The yield in the 10-year note is back up to 4.52%, despite the fact that the Fed cut short-term interest rates by a quarter percentage point today. Stay tuned now for the 790 KBC News Blitz, and I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money, 790 KBC.
Named one of the best personal finance podcasts, The Stacking Benjamin Show with Joe and his friends makes financial literacy fun.
Draymond Green has a podcast. He was asking Mark Cuban why at the beginning of 2024, Cuban sold a huge part of his company.
He's like, did you see how much money I got? I'm sure there's a more graceful answer than that, but dude, I bought it for $200 million and sold it for $6 billion. Like, what the heck? Of course
I don't think it was that much more graceful than that.
Find out more by searching the Stacking Benjamins podcast, wherever you listen.